Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York. It is Friday. Happy Aloha Friday, except it's Friday the 13th, November 2015, and this is the daily report for gold and silver. We do have the precious metals drifting lower again today, with gold off approximately $2.50 on the day at 1082 and change. It's had a low of 1079.84 and a high of 1088.65. First and foremost, there's absolutely no doubt we have seen a tremendous downside pressure this week in the precious metals complex. In the commodity complex as a whole, well, we can add U.S. equities also trading lower on the week. But when we look at the net change in the price of gold, for example, and compare it to last week's carnage, in which we saw this market drop from about 1140 to about 1090, so about a $50 drop. Considering that, when we look at this week's activity, we've only got a $10 range in between the opening price on Monday and the current prices we go into the close on Friday. So that is telling us that at least we are seeing a slowdown, a diminishing of strength in the basic trend that we're looking at, and that trend has been down. We can absolutely see that when we look at a daily chart. This, of course, in Japanese average format. We finally have a upper wick, very, very slight, but you can see that right in here. It's the first time we have seen an upper wick for 12 trading days, so over 2 weeks in time. And so that, to me, is telling me that whether or not this market actually finds some support next week and we get some sort of bounce, because at this point, my sense is that we, A, will get a bounce, and B, we are going to consolidate at these lows right here, this 1080 point. But the one thing that we can say is that we're finally getting a very, very small body size, and we're starting to see the kinds of moves that we look for at critical pivot points. And we've talked about this throughout the last week. In fact, that's been the prevalent topic of discussion, is what we want to look for to give us an indication that this market is in fact finding some support, and the downtrend that we have been experiencing is beginning to diminish. We certainly are getting our first signs of that today. Now, one of the reasons I believe that we're absolutely at a critical price point is the fact that when we look at our long-term studies, and we're doing just that, pulled up a daily chart, we've got our wave 3, our wave 4, our assumption, once we hit these lows and then moved up $100 off of that, this of course is the 1191 print, that we were in fact beginning a wave 5, and that wave 5 would start to, through a series of peaks and valleys, begin to trade higher. That obviously didn't unfold in the way that we thought that it would, because if anything, and let's go ahead and blow this up, we saw some dramatic pressure in the market as it traded back to these lows. Now, what that does is it truly, truly gives us a double bottom in this market at this point, based upon the lows of 1071, that was the prior low, that's this low here, and then 1073, that was the intraday low that we saw yesterday. Now, in as much as we have seen gold genuinely under pressure, silver has also been devastated over the last couple of weeks. We are starting to see some of the same signs that we are seeing in gold. First, we'll look at a standard candlestick chart. You do have body size diminishing. The interesting thing is we're trading at a new low, this being 1423. And unlike gold, which traded within mere fractions of the low, 71, former low, 73, intraday low yesterday, we have silver still fairly far from the lows being right at around $14 per ounce. We're at 14.23. So we are just off of these lows. And when we convert our daily chart of silver into a Japanese average chart, what we will see is we have not seen this market have any kind of a wick. Body size is still fairly sizable. It's not as large as the dramatic sell-offs that we saw, but we've got an absence of any kind of upper wick. Body size is not diminutive. So in my opinion, we still might have some room to the downside in silver, although I think we're seeing some very, very interesting signs in gold that tell us we could be finally seeing some sort of support in the market. Now, as we've talked about throughout the week, the entire precious metals complex has been hit and hit hard, but I draw your attention to this chart. It's a weekly chart of platinum, and take a look at the devastation that we saw this week, in which we went to a new low in platinum rather than a matching low. In the same way that silver and gold exhibited a matching low, we had a definitive break when platinum actually traded under 900, currently at 863.70. And as I said, we have a dramatic drop. This kind of a drop really has not been seen in the market probably since October of last year. So my overall sense of the precious metals markets right now is mixed. I think we're going to have continued downside pressure in platinum. Silver has a little ways to go still, but I do believe we are starting to see the first real signs in gold that we're finding some support at this critical area. We're going to call it roughly 1080 right in here. As I said, for the first time, we've seen an upper wick, very, very small body size in the current candle, today's candle, and it is very much like some of the activity that we have seen when we get these pivots. So if we get a green candle, if we see a candlestick pattern exhibiting a pivot point or key reversal pattern, we will certainly want to act accordingly, because I think we will see a bounce, and that bounce at minimum will take us between 11 and 1105. However, all bets are off if we break below 1080. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you next week on Monday for another daily update and review. Bye-bye.